All right, welcome to the Engineer Real Estate Investor Show. My name is Junius Williams IV. A little bit about my background. I'm a civil engineer, graduated from the University of Houston. I went back to U of H and got the MBA with a focus in real estate. Currently, I work in real estate development. And before that, I worked as a civil engineering consultant for 5 years. My real estate investing experience is in single family and multifamily. I was a single family landlord for 5 years. I had three single family houses, and my multifamily experience is a 72 unit syndication that we completed earlier this year. And today we have Jade Laye as our guest, and I'll let Jade introduce himself.
Hello, everyone. My name is Jade Laye, as Junius stated. Thank you, Junius, for extending the opportunity. Um, let's see. My background is in electrical engineering. Straight from engineering school, I went on to law school. And from law school, I went back to law school again to get an LLM in patent law, which is basically it's like a master's in law. And so,
I had to look that up to even know what that meant when I
yeah,
was making this slide.
yeah, not a lot of attorneys, especially patent attorneys, actually go back to school in order to get that degree. I did that. I worked at the Patent and Trademark Office for a couple of years as a patent examiner, and from there, this was back in, I guess, 2004. From there, I took a job with a law firm here in Houston, and my wife and I moved here back then. So we've been here in Houston now for about 13 years. So I currently I'm a lawyer for one of the largest law firms here in the state of Texas, Haynes and Boone, and there my practice is mainly on patent prosecution, which is basically I help companies acquire patents. So I'm not a litigator where I actually go in the courtroom and argue cases. So I just work directly with the client in order to acquire patents. I started real estate investing back around 2009. Started buying single family homes. Currently now our portfolio is about 50 homes across three states. Most are in Arkansas, but we also have some in Memphis and here in Houston. And my multifamily experience, currently I'm a GP on about 650 units, four properties across two states. And so,
Gotcha. I think I
uh,
have 55 million in assets. I think I might have sold you short with your newest deal, but that's what you had on LinkedIn, so that's what I picked
yeah,
up.
no, that's up to date. So yeah, currently have 55 million
Gotcha.
in assets. So it's been a great run.
Gotcha. And how many single family houses did you buy last year?
Last year we bought about 15 last year,
That's crazy. That's
which
so crazy.
now I mean I started buying houses in 2009, and so we started out buying maybe one house a year, and then it got up to two, and then it just exponentially grew. And so over that time I also built up a team, and so
Mm,
they're great, and so they've allowed me to continue to scale up, where I mean it's really passive in that I mean I identify the houses, I purchase them, and then I mean they do everything else. So
gotcha. So since this is a engineer real estate investor show, I'll ask you what made you pursue engineering as an undergraduate degree.
sure. Well, my approach to a career has always been very practical. And what I mean by that is
Yeah.
just that, growing up, I knew in order to, get out of the, area neighborhood that I came up in. I mean, I had good parents that taught me, a big part of that was going to be education. And so my approach was always basically that, hey, I have to work a job. I have to work 40 plus hours a week. I may as well get paid as much as I can while I'm there. If you're a minimum wage guy, or if you're making $1,000 an hour as a lawyer, you still have to go to work every day. And so I said, well, hey,
Yeah.
if I have to go to work every day, I may as well
We get compensated.
leverage my time. Right.
Absolutely.
And so I said, okay, well, looking at college degrees at the time, I mean, the highest paid jobs straight out of college were in engineering. And I think they're probably still in engineering. So honestly, that's why I chose engineering. that's that's about it.
So I first started as a electrical engineering major at U of H, and I made it 3 years, man. And I got the circuits,
You got the circuits,
and
huh?
I was like, nah,
Yeah,
just not gonna be for me.
well, you know, um, now I chose electrical engineering because being practical, I also always wanted to have as many job opportunities as I could. And so I always
Mm,
heard, double E's and maybe chemies
Jimmy's,
were
absolutely.
probably the highest in demand at that time. And so, I, after a day or so looking at the chemical engineering curriculum, I knew, nah, man, there's no way. I'm not even going to try this. um, and chemistry was not my strong suit. And so, no, I ran from the chemical engineering building. And then so I said, okay, well, it's got to be double E.
Gotta be
And,
double.
so thank God I at least had enough, aptitude to get through engineering school. So,
Gotcha. And while you were there, you pledged a very, very small fraternity that nobody's heard of.
yes, I'm a proud member of Kappa Alpha Psi. Yo, Nu. And
And
Junius, I mean, hey, I'm not gonna hold it against you, man. I mean, you pledged a small frat as well. We ain't
yeah,
gonna go
very
there,
small.
but
It's only
yeah,
been around a couple of years. So,
yeah, yeah.
so switching over to real estate, how did you first, hear about investing in real estate? How did you first, come about thinking about you want to invest in real estate? It was like that first, like, oh, okay, I need to pursue this a little bit more and get a little more educated.
Oh man, I can still remember it to this day. I mean, I was never a guy that I never thought anything about real estate. I didn't know anything about it. And then one day around, I guess this was back in 2008. It was shortly after the crash,
Mm,
and my dad was talking to me, and he said, oh son, I just read this book called Rich Dad Poor Dad. He said, oh, you have to read it. And had I had this book when I was a young man, I mean, wow. And so he gave me the book, and my father has been like the catalyst for, I mean, so many things in my life. And so that was one of many books that he gave me. And so I was like, okay, Dad, I'll get around to it eventually. I mean, at the time I had just started working at a big law firm. I was working a lot of hours, and so I just didn't have a lot of time. But man, once I picked up that book, I mean, it blew my mind. Where I was like, wow. I mean, so this is how build wealth. And so I mean that's where my journey started.
gotcha. Cool, cool, cool. Um, You mentioned in single family you built a team. When you started in multifamily, how did you kind of start putting together that team?
Well, honestly, I'm still working on the team.
The
So,
acquire.
what I've I've learned in real estate, I mean, it really takes a while, you know, to really build your team. And a lot of times, the people that you kind of start off with, most of those people won't stay with you.
Hmm.
And so I just understood that. And, and so slowly I've been, identifying those people that can really add value and, and really help me, and people that I can keep on the team long term. So, mhm.
And what was so like we said before, you got 50 single family houses. What led you? Because I mean, 50 houses. Some people's goal is just to get 10 houses, and you five times that. So, what made you switch from single family to multifamily?
In a nutshell, to do larger deals
Mm,
with houses, I mean, the returns are good. Actually, the returns in the markets that I'm in, as far as houses, are even better than apartments.
mhm.
But it's smaller chunks of money. So I mean,
Yeah,
you just have to do so many of them in order to build up a lot of cash flow. And so I
yeah,
saw apartments as an opportunity to do less transactions and grow faster, basically. Mm.
gotcha, gotcha. When you first started to figure out multifamily and commercial real estate, do you think your engineering background kind of helped you understand the business or learn the business any quicker?
That's I, I would say for me it did, in that in apartments, the way that we invest in apartments is very much data driven. So it's a
Hmm.
lot of numbers. There's a lot of
Right.
spreadsheets and numbers everywhere. And so, but being an engineer, that didn't intimidate me. And so I would say from that standpoint, yes. I mean, having an engineering degree and that education, knowing that it doesn't matter how hard it is, I've been trained to figure things out. So I can learn it. Let's do it.
Right.
Mm.
And so getting into like the underwriting and the spreadsheets, like what do you kind of look for when you're underwriting a deal? You look at, obviously, I'm sure you look at submarkets, obviously, you look at rents, expenses, cap rates, all those kind of things. Are there any like top three things that you look at when you just got sent the OM and you're like, okay, boom, boom, boom. I like these three things. I'm gonna spend a little bit more time digging into it.
Well, and that's actually changed over. I just closed on my fourth deal, and so the more experience I get, I mean that changes.
Hmm.
Now, the first thing that I do is I look at the deal. I mean visually, and I say, okay, is this something I would be proud to own? You know,
Mm. Right.
and because I mean, a lot of deals now, pretty much everything is what I like to call priced to perfection, meaning that
Yeah.
these deals are priced now to a point where if your operation, well, okay, I won't say all deals, most of them are priced to perfection, where if your operations and your execution of the business plan isn't perfect, it's going to be hard to make
You in trouble.
money, you know. Um,
Yeah.
And so the first thing I do is I just look at a deal and say, okay, is this a deal that me and my investors would be proud to own, proud to drive by and tell people, hey, we own this. And then from
Right.
there, then I start to look at, the characteristics of the building and the market that it's in. So, and, when I first started out, I mean, I was just looking for good opportunities. But as I've grown as a sponsor now, what I'm looking for gets it's getting more selective. So
Yeah, I would definitely say having pride in something that you own would definitely go a long way. Like being able to drive by a property and be able to point over and say, to your wife or to your friends or to whoever and say, hey, look, like we own that property and this is the upgrades we're doing to it and this is the
right,
area and how we're improving the community. Yeah, I could definitely see why you might want to start there. So your strategy, when I first met you, you were doing like you had just finished your first deal that you sponsored all by yourself. And then a couple months later, you sponsored your next deal all by yourself. And then you did your third deal with the Timberland comment. And now you've done like this massive 400 unit deal in Dallas. Walk us through like that transition from, okay, I'm gonna do it all by myself to, well, maybe I'll bring on some co-sponsors and be able to do larger deals.
yeah, yeah. Well, when I first started, I was just trying to get into the business. And so, man, hey, you do the first deal, the first good opportunity that you can find. I mean, you do that deal. Uh,
Right.
and so, it just so happened. I mean, I was looking at a lot of larger deals, but the first opportunity I found was like a smaller 50 unit deal. And so I said, well, hey,
Why
let's
not?
do it.
Right.
And, and I wasn't intimidated of being, a first time sponsor and doing the deal on my own. And, I felt like that would really give me an opportunity to really cut my teeth and get great experience. I mean, I had a group of really experienced sponsors around me where
Mhm.
I knew that I could call upon them in order to counsel me, advise me on what I needed to do. And so I took the deal down on my own, and then 2 months later it just so happened, I mean, I was not out trying to find another smaller deal, but I did. And so I said, well, hey, let's do that one as well. And
Yeah.
you know, I learned a lot on those deals, a lot on those
Yeah.
deals. And from there, I did a tenants in common deal, which was different. Which I mean, thus far has turned out to be, great. That deal is actually in West Memphis, Arkansas, which is my hometown. It's right outside of Memphis, and I mean that deal is it's doing great. And then from there, I said, well, um, you know, on that was the first deal where I kind of worked with partners on it,
Mm.
where even though I'm the asset manager on that deal, but I still have partners that have input. But I have good partners who have allowed me, to act as the asset
Yeah. Do
manager
you?
and
Yeah. Absolutely.
run the deal. So, and the deal is doing well, and so everybody's happy on that deal. Now on this last deal I did, I mean, it was seven of us are
Hmm.
co-sponsors on that deal. So this was the first time I did a deal where, I was not running the deal,
Yeah.
and
How was
so
that? How was that
yeah.
feeling?
Well, thus far, I mean, it's turned out to be a good thing. In that, I mean, I'm working with a great group of experienced people who are getting along, and we're divvying up all the
Mhm.
tasks. And I mean, everything is not on me to get it done, which I
Right.
mean, great, because a lot of stress comes with, as I'm sure
Yeah,
you
I see
found
the
out.
gray. I see the
Yeah.
gray. I got some gray as well.
Yeah, I would like to see you in a year. I'm gonna look at you then. It's it can be stressful as a lead,
For
and
sure.
so this was the first time I was like, wait, I'm not the lead. Everything is not on me to make sure it's getting done. Okay, and I still get equity in a deal as a sponsor. So
Good.
it's actually, yeah, I mean, thus far I'm enjoying it. So
Gotcha. It sounds kind of like I like to make NBA analogies. It's like you were the man on a team, and then you joined a bunch of other really, really good players, and they would say, "Hey, man, we just need you to do X, Y, and Z." And you're like, "Wow, I don't have to score 40 every night. I just
right,
got to come in, hit a bunch of corner threes, lock down defense, and
yeah,
we all win."
right,
Yeah.
yeah.
So how did the deal? How did that just humongous? How did that even come together? At what point did you get brought in? I mean, I'm looking at the numbers right here on my other screen. $37 million purchase price, $11.5 million equity raise. It's outside of Fort Worth, I think. How did that? How did that whole process even begin?
Well, I was looking for deals here in the Houston area and Arkansas, and thus far I hadn't found anything that I liked enough to really go after. And so, I said, well, Jade, I mean, why not, open yourself up to being a co-sponsor on a deal? And so, I know a lot of leads, and so I just basically reached out to everyone that I may be interested in co-sponsoring with, just to let them know, hey, I'm interested
Sure.
in being a co-sponsor. Prior to me doing that, I think a lot of people had the idea, hey, Jay doesn't want to co-sponsor. And so once I let everybody know that, then the opportunity came about. So it was
Yeah.
just, networking. And
So one of the guys. Go ahead.
well,
Go
I was
ahead.
just going to say, and so I was brought in to the deal early on. It was not yet under contract, but me and one of the lead sponsors, a friend of mine, Jay Gajavelli,
Mhm. Yep.
he approached me and asked me if I would be interested, and I was like, sure. I looked at the underwriting on the deal, and I knew immediately, because I underwrite a lot
Man.
of deals in Houston and
Yeah.
Arkansas. I knew immediately. I said, "Oh man,
Man.
this is a great opportunity." So yeah, man,
Yeah.
I'm in. So
Yeah, I looked at the underwriting just before we got on the call. I was like, "Holy cow!" Yeah,
yeah,
this thing is definitely tremendous opportunity. So like I said, when you guys closed, it's very happy that you guys got it done. Like I said, it was
thank you.
big time for you guys to close a deal. This might be one of the biggest deals. This is definitely the biggest deal where I actually know someone that had a hand in putting the whole deal together.
Yeah,
So thanks for
well,
being that guy for me.
uh,
Another thing that I thought about now that I've actually done my first deal is that, and you've learned this now, is that you don't have to do everything. You don't have to be the guy to find the deal, to operate the deal, to raise all the money for the deal. You could just play one or two of those roles, or maybe just one of those roles, and still be an asset to
right.
a general partnership team. So that was one thing I kind of saw that you've now done is like, okay, you could be a smaller piece of a bigger deal, but now your portfolio is spread out over
Right.
418 units in Dallas, spread out with all the other assets you control. So so transitioning to advice, like I
Mhm.
said, this is a show for engineers looking to transition into commercial real estate. Any suggestions for engineers looking to maybe dabble in investing in commercial real estate?
Sure, sure. Well, the first thing I would do is get educated. Definitely,
Right.
you don't want to just jump into anything, especially apartments, which are very, capital intensive. And
Mm,
so, especially if you're going to be raising money from other people, then you definitely want to get educated, get around some more experienced people that are already doing it.
right.
I would say, just educate yourself and take action. A lot of people, they, especially engineers. I mean, we just get in, what they call analysis paralysis,
Mhm.
where we're just going
Absolutely.
over the numbers and we think
Analyze and analyze numbers.
analyze. But I mean, hey, at the end of the day, it's an investment, so risk is going to be inherent in any investment, and so
Right.
at some point you have to say, okay, based on the data, this looks like a good opportunity. I think my team can execute. Let's do the deal.
Mm,
And I think what I see from a lot of engineers is that they have a hard time getting over that hurdle of, okay, I understand the underwriting. Now, can I get comfortable with the risk involved in a given deal? So
right. It's the way I tried to explain, because a lot of my investors were engineers, was engineers, you're whatever company you work at, you are making business decisions, every day. Every second
right,
that you're there, you're gathering data, you're putting it into some type of formula, you're figuring out, some complex problem, and then you're making a recommendation to, mostly to like a business person, and they go out and they make a
right,
business decision, they go out there and try to make money. It's basically the same thing. It's just different variables and a different formula, but it all goes to, kind of the same end result is, hey, I put in the numbers say this, you look at the team, do you trust the team? And then at the end of the day, you end up having to pull the trigger. So my last question for you, what does financial independence look like to you?
the short answer is that, well, it depends. Um,
How does it depend? That is an engineer's
yeah,
answer.
a bit of a lawyer's answer too, but
Oh,
and the
no, yeah,
reason
you're
I
right.
say that is that when I first started off, financial independence was when my passive income meets or exceed my monthly expenses. Okay,
Right.
that was independence. Okay, well, thank God I got there. Okay, but then once I got there, I said, but hold on. I mean, what if, I lose a deal, or if,
Mm,
X number of my tenants don't pay me in a month, all of a sudden I'm scrambling. And so I said,
mm,
well, so now it's, well, I want to double my monthly expenses. And
gotcha.
then again, I'll say, okay, now I'm financially independent. But I mean, what I've found is that every time you set a goal and meet it, you just find another goal.
Another goal.
Yeah,
Yeah.
yeah.
Gotcha. Yeah, I was just thinking about. I was like, man, you got 50 houses. You don't need to go to work. Like you
Well,
good.
no, but I mean, what if what if half of them burn down? It's like, oh man, not So yeah.
I gotcha. Cool, cool, cool. Well, man, we're gonna wrap up. I appreciate you joining me. When I started to put this whole thing together, I wrote down two names, Ron Wyndon Jr. and Jade Laye. Definitely two people that I was gonna interview
Ron's a great
first.
guy. Yeah.
So I remember, like, when I kind of started my whole multifamily journey, you were one of the first people I met. I remember I like cornered you on a bus tour in Dallas, and you sat on the window and I sat on the aisle. And for like whatever that 20-minute drive was, you were like the first person to like explain to me from A to Z the full step of syndicating a deal, all the risks, all the things you got to do, everywhere where they could trap you or you could, potentially lose money. So just thank you for like
Wow.
everything that you've done. You continue to be, you know, you're in a different fraternity, but you're a big brother to me and someone I definitely look up to. And
Well,
man,
man, hey,
Godspeed, because the more you push, I know I can just kind of, if I can just follow in your footsteps, man, I'll be a-okay.
man, well, hey, I appreciate the compliments. You know, and Junius, you'll do very well in this business. Also, you know, just keep doing what you're doing, man, and keep buying deals. You know, just keep investing, keep underwriting conservatively, and when the numbers work, do the deal.
Pull the
Do it.
trigger.
All right.
Absolutely. All right, man. You have a good evening.
All right. Thank you.